So for the next a few minutes, I'm going to be showing you my profitable trading strategy. Now, I've been using this for about 3 years now, and I've just continuously made a few modifications to make it even much better. And today, I'm going to share everything with you. So we shall start off with a bit of a whiteboard, but then we shall also go off the charts so I can show you a real practical approach. So stay tuned, smash the like button and subscribe. All right, now let's go. Now, very first, importantly, you need to know things to look out for before even taking a trade. Rather, the very first thing that I will personally always look out for is the trend, okay? Now, I don't care whichever type of trading strategy you are using, the trend is key. The trend can't be to the upside and you're thinking of sales, perhaps, unless you're just scalping and looking, for just a few smaller trades. The next up, what I need is key levels, okay? Some other people can also call these points of interest, okay? I'll just point of interest, yep. And then lastly, I have my entry levels, entry and exit levels. In here, again, this basically, again, with my stop loss and my take profit, okay? Now, let's start off with a trend. We typically have 3 trends. We either have an uptrend, okay? I'll take this off quickly so we can have a better understanding. So we definitely have 3 trends. So we have an uptrend, okay? How do you confirm that this is an uptrend? Well, it's pretty easy. You need to see the price forming newer highs, okay? So you call this your higher highs, your higher highs. Please don't mind, I'm going to show you everything on charts, so it's going to be much more easier. But you also need to understand this concept, okay? So pay close attention and let's go. So this is also a newer higher high. Well, higher highs, why? Because we are breaking the previous highs. Then this is going to be a higher low, a higher low, a higher low. So it's pretty easy. Come over to your chart, start off with bigger time frames. Personally, I'll always do the H4, but you could also start, say, from the daily. It doesn't matter, all right? So you have those, and now you have identified the trend. On the other side, say you had a downtrend. Again, it's pretty easy. You need to see the price moving such a direction. So we have this. So in here we have lower lows, we have lower lows, we have lower highs, lower highs. Why is this a lower low? Well, it's a lower low because it's already low, but even lower than the previous one. Pretty easy to understand. Then lastly, you either have your consolidation or your sideways, where the market is typically consolidating, such a thing, right? So in here, nothing much is happening. I would say it's not a good idea to trade these sessions, because as we shall discuss in a few, personally, I actually don't. So I'm majorly capitalizing on either an uptrend or a downtrend. We have the very first procedure to watch out for, okay? Next up, key levels or point of interest, okay? And that's the very next thing. Now, this doesn't matter to some traders. You could look out for your supply and demand zone or your support and resistance. But for me personally, I will look out for my supply and demand zones. What are these? Well, we need to see what we had: intensive buying or intensive selling. Now let's go ahead and see a much better example of here. Okay, step number 2 is your key levels, okay? So number 2, we have our key levels, or we mentioned points of interest, okay? As I mentioned, this could be your supply and demand, or could be your support and resistance. What's the most important part in here? You see, when you're trading, you need to find what other traders are literally taking trades, or where we have volume. Now think about it. You don't want to be the first person who's going to buy, yet everyone is selling. We have big institutions selling and you're buying. It doesn't make any sense. And that's where these levels come in. So a supply zone is typically where we have rather intense selling, okay? So we have intense selling coming in, okay? Then on the other side, your demand is where we have intense buying coming in. All right, so once you've drawn these levels, sometimes you'll need to wait for the price to come back. So So you're able to take a trade. Now let me give you an example. We shall start off with your supply. All right. So let's say initially we have the price initially pushing to the upside. Okay, we have a point here where we see a bit of crazy selling. This is key, okay? So initially we have buyers, okay? But then out of the blue now we've seen sellers coming in, okay? Now, I know the question should be, well, what do I do next? Vidollar. Well, this is the thing. So at some point you're going to draw a line this way, okay? So this is going to be a key level. I mean, this is pretty easy stuff. I hope you guys are understanding this. Now, what you are going to wait for is for the price to come back to this previous zone, okay? Once the price comes back there, now you're able to sell. So you have a good trade. But please note, you're not going to just jump in. No, we shall also look for entries and confirmations, just like I mentioned, that being the very last step in the strategy. So off here, wait for a confirmation and then go ahead and sell. All right. Now there's a scenario where the price is likely going to break out, stop out, early entries with our stop losses here, and then the price goes down. But we shall look at that. Now, same thing with your demand is just the opposite. So with demand, this is what you're looking at. By the way, I would love to know what you guys think about these videos. Let me know down in the comments. And then more to that, I will start answering some of your questions, okay? So please go ahead, drop any questions just down in the comments. And then I'll check that and answer that in the next upcoming video, okay? And more to that, we have 2 links down in the description. One takes you to a free Telegram. You get access to my trades, my signals, and a community of over 80,000. And then the next link takes you to the email list where you get trade updates and, you know, motivation. Well, I was mentioning with demand is just the opposite. Now this time, let's say initially we had the price selling, okay? And then comes to a point and then we see insane buying pressure. So this, we have buyers. In other words, you could also call it your demand. You can only confirm that it's a demand zone if you have a huge push, okay? We shouldn't expect, you know, funny, bullish candlesticks here. No, we need to see intense big candlesticks, meaning we have a lot of pressure coming in and the price pushing to the upside. Okay, let's say up to there. Now, what you need is to draw a level off here, wait for the price to come back, and then you'd be able to get your entries. So let's say we have the price getting back to this zone. 2 options we shall see. You can either set pending orders or have direct executions. And there you go. So you have your beautiful buy entry off here. Now, it's pretty easy, basically. Now, lastly, as I mentioned, the next thing is your entries and your exits, okay? Having understood where to place your trade isn't enough. Remember, you need to wait for confirmations before you can open up that trade. So let's get to charts and see real live examples. This is GBPSD. Now we mentioned the very first thing that you must watch out for, as I mentioned, is the trend. What's the overall trend in the first place? So I'll go ahead and show you quickly. So let's start off with the H4. Remember, we are keeping it bigger time frames for the trend. You need to see the bigger picture. It's really pretty hard for you to identify what the overall trend when you're on smaller time frames. To be honest, it doesn't work. Now let's start off and see. So this is on the H4 and this is GBPSD. So from what we can see, initially we had a downtrend. Clearly, you can see that. Why? From what we just mentioned, we said we can easily confirm that it's a downtrend when we have continuous newer lower lows. All right, I'll just show you. So we have that. We have this, okay? Then on the other side, we also have these lower highs. There we go. We had that. Then out of the blue, we see a change, right? And now what we are currently dealing with is an uptrend. And that means our attention now should be on an uptrend. We need to look out for buys. And let me show you why. So right over here, we now see formation of higher highs, okay? I'll go ahead and mark those. So we have higher highs, we have, you know, newer highs over here. Then we have another high over there. On the other side down, obviously these are like your higher lows, okay? Your higher lows. So we now have the trend. Next up, are the key levels, or we also call them points of interest. So let's go ahead and see. Now you can still do this on the H4 or even as you scale down, but I'll show you something in a minute. So from what we can see, we have an important level off here. You guys see that? Well, what's happening is we see the price got off here, then we saw insane selling pressure. So you can mark this out as your supply zone, okay? So you could mark this as a supply zone. I've done a detailed video on demand and supply before, so tap the link somewhere up or down in the description so you'll be able to watch the detailed video. All right, so that's the thing. So well, this means that we do expect the price to come back to this zone, and perhaps once it gets here we'll be able to sell. Now keep in mind we are currently dealing with an uptrend. Well, that means we could still capitalize on buys. Now let's go over to H1 and see. Okay, now starting from the H4 to the H1 to the M15 for entries is what we call scaling down. You're basically starting from bigger time frames and moving down to smaller time frames for better entries. Okay, so on the H4 this is how it's looking. On the other side, with what we can see, again this is also important. All right, this is an important level where we do see insane buying pressure. Now if you stretch this level, actually you do notice that sometime back the price got here. Okay, the price got here and we saw insane buying pressure. Now what comes in mind? Well, this is a previous demand zone, so that's a key level already. And guess what? The price got back here and yes, we bought. This would have been good money. So in other words, like what I mentioned, we said off here you could decide to place pending orders or you wait for a direct execution. But yep, this trade is gone. But now let's look at our next trading opportunity. So on the other side, you can also draw a level off here, which is important. We initially had buys, and then out of the blue we had insane sellers. Okay, insane selling pressure coming in. So if you mark this out, all right, so that's important. So that means we do expect a bit of a reaction once the price gets here. Now I want to show you something real quick. Well, the price moves in a push phase, a bit of a pullback, a push phase, a bit of a pullback, then a push phase. So in any way, you're not going to be taking your trades when we have push phases. Nope, you need to wait. You need to wait for the price to come back to these areas, collect more orders at these points, so you're able to take better trades. So all these are momentum pushes, so you can't be able to take a trade. And that's the same thing that we are looking at currently on GBPST. See, the price is already in a push phase. Let's go over to M15 so we can have a much better outlook. So the price is already in a push phase, so off here you can't get in. Basically you can't place a trade because you're going to get in here and more for enough we could have a huge pullback and then you're in a drawdown or get stopped out, and then the price finally gets back, you know, to the original direction. So pretty easy. So off here we need to wait for the price to get off here and then come back. All right, so we do expect the price to come back into this zone firstly, then come back for a bit of a pullback, and then we'll be able to take those buys. Now let's go over to some other pair. We can try JPY and C. So we shall delete all our drawings and let's start off from the H4. Okay, just quickly. Okay, there we go. Now same thing. Number one is what's the overall trend. Cool, so from what we can clearly see, we have a downtrend, pretty much easy. We all see that. Usually the price has been pushing to the downside, and we can now go ahead and draw our levels. Again, you could be asking why a downtrend? Pretty easy. Please remember what we discussed. A downtrend, we have formations of lower lows and, you know, breaking all those lows to form new ones. So we can go ahead and draw some of our levels. This is important. Well, why? Because let's look at this point. We initially see the price got here and then bought off insanely. So let's draw this as a demand zone. There we go. Why? Because the price got here, we have insane buying. Remember what we said? Next up, you'd wait for the price to come back to this zone and then you have a trade. Now let's go over and see, because this has already happened. So our next level of interest could be this area here. Well, we have now multiple zones. We have that, but then we also have another little zone over there. We see the price got here and then sold off insanely. Okay, that being on the H4, we can scale down to H1 and then let's have a much better understanding. Just like the same approach from what we just saw on GBPSD, the price is already in a push phase, so we need to wait for that reaction back into this zone. Actually, off here you could even think of placing a pending orders for short-term sales, because again, with what we mentioned, we said the price is going to push insanely to the upside or the downside, but then it has to come back for pullback. Like you can't escape that. At some point the price is going to push like what we see, and then come back for a bit of a pullback, collect more orders, push to break the previous high, come back, push to break the previous high, and in such an instance we have the trend continuously happening. Okay, I also notice an important level off here. I think if we draw well, we have this, but I think this is much more important. Now in here, what are we looking for? Sometimes you need to see what has the price reacted and how many times. So from this example, we see the price got here, sold off, got back to this zone, sold off, got back, sold off, and now the price finally breaks out. So we need to see, is the price going to finally come back to this point first before buying off? All right, and that's pretty much how easy it is. Now we could quickly go back to H4 and see how the price is looking. Oops, my network is slightly slow, but yep, there we go. So overall trend to the downside, we already have that, but then looking at what the price is doing, we are back into a demand zone, and then we have that huge bullish candlestick, and yes, you'd also want to capitalize on those buys. Again, next level of interest is this point. Once the price gets here, all right, once the price gets here, there is a possibility of the price getting back to the original direction, so we are able to again sell. So overall in here, you're making money. Whether the price is in an uptrend, again, I would say the most important part is having the key levels and waiting for the price to get back to these areas. Now we could go over to M15, and there we go. And that brings us to the entries. So with the entries, you need to look most especially out for the candlestick formations. I mentioned it when we were discussing, sometimes we have a scenario just like this. So I'll go ahead and show you some real example. So say we have the price pushing, all right, then back into our zone. Okay, let's assume this is it. Now I want to say this is our previous. Okay, we shall mark this, say, as our demand zone. Now, what happens is, I mean, we want to buy once the price gets here, but there's a scenario. The price is going to get here, all right, then break out, slightly stop out all the early entries, and then push to the upside. Because what's happening is most traders have already entered in with buys here and have their stop loss just below the zone, okay? And what happens is the price is going to come, stop you out, and then push to the upside. So now, how do you avoid that? Let's go over here. We could have a perfect example. We shall go over to GJ. All right, okay, there we go. So back to H4 real quick. Okay, our point of interest is off here. Actually, even these weeks, see the price came, left a week, left a week, left a week, and then finally pushed up. So let's study this point first, okay? So we shall go ahead and reduce to, all right, now you could go over to M15 and look out for these formations, okay? Now with this, it's pretty much easy. In here, you bring in candlestick formations or patterns. Could say a double top, a double bottom, whichever, or an engulfing candlestick, you know, whatever. Now let's try and have this example here. So the price gets back into our zone, you know, actually come back to our zone, bounces off, gets back but didn't tap in, same thing, and finally we have that break into the zone, and yes, we have an engulfing bullish candlestick. All right, we see that, and that's on the M15. Well, we see this huge bullish candlestick. That would have been a pretty much better entry. Why? Because initially we've seen the price getting here, leaving weak rejections. What does a weak rejection mean in the first place? Let me quickly show you something. So you say have a candlestick just this way, all right, and then you have a huge, say, wick. Well, initially the price had pushed down up to this point, all right? The price that it initially pushed up to down, this was a whole body, but then out of the blue we have more opposite traders. Let's say initially this is sales, now we have buyers getting in to oppose the price, and then we have a week remaining. So whenever you have weeks, think of rejections or reversals coming through, all right? Because that's very, very important. So off here with GJ, that's the same thing that we noticed. I think that was much clear on the, was it on the H4 or the H1? Let's quickly check. Okay. All right, sorry. Okay, there we go. So it's pretty much even clear on the H4. We have a series of week rejections, and then over here you have your buys. Either way, you could wait for the price to first push out of the zone, break out, and then you'd be able to take that trade. So it's pretty much easy. You're going to put much of your focus, number one, on the trend. That's key, no doubt, and you can't escape that. Number two, you have your points of interest or your key levels. Could be your demand and supply, just like for my example. And then lastly, you have your entries. Having watched this, you need to get down and do a lot more of practicing so you're able to get even good with this, okay? You can easily do that by backtesting, even with your demo account before you go real. Now that you've also watched up to this point, we have two links down in the description. One takes you to a free Telegram. You get to get free trades and all the updates, and next up to an email list where you get trading motivations and everything directly from myself. And keep it, let's talk more action. And I'll see you in the next one. Cheers, I'm out.